What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically when it comes to income ETFs. And today, we are going to answer the question, will BTCI recover when Bitcoin recovers? Now, this is in response to a comment that I received, basically making the claim that BTCI would not recover with Bitcoin, which is not true at all. And this is not to pick on anybody or call anybody out. It's just to address a fundamental misunderstanding of how BTCI works and how it is very different from a lot of different income ETFs out there that might not participate in the recovery of their underlying or reference asset. And so what I want to do in this video is break down the mechanics of the covered call strategy that NEOS implements with basically all of their income ETFs, not just BTCI, and how it allows for these their specific income ETFs to participate in the recovery of, in this case, Bitcoin. So basically, by the end of this video, you're going to understand how BTCI actually works during a Bitcoin recovery. That's what we're trying to do here. And to answer the question, are BTCI holders screwed? No. I think, in fact, it's the opposite. I think we're being set up for massive success here. We have an incredible opportunity in front of us to acquire a phenomenal income-producing asset at very cheap prices, basically at its all-time lows. I think that's a really good opportunity. But that's just me. Let me know what you guys think in the comments. But let's get back to this claim here. BTCI will not recover when Bitcoin recovers. Now, here's the thing. That statement would actually probably be true if you were selling covered calls on the entire portfolio and or you were selling at the money options. Basically, what you're doing in that scenario is you're selling away pretty much all of your upside for the maximum amount of income, maximum amount of distribution that you could possibly get. Now, is that a good or bad thing? I would say it's neither. It just depends on what your investment goals are. What are you trying to accomplish? Are you trying to accomplish absolute maximum amount of income and cash flow? Well, then an income ETF that sells on 100% of the portfolio and does at the money options is probably good for you. Now, you might run into NAV erosion issues later on down the road, but overall, your total return is expected to be pretty good. And that's key. You have to look at total return, not just the price of the income ETF itself. Look at the total return, which includes all of the distributions. Okay. Now, for me personally, I don't like income ETFs like that. I want to maintain some upside exposure to the underlying asset, but that's just me, right? You guys have to figure out what it is that you're looking for in your investment goals, right? But here's how this works, okay? So BTCI, basically NEOS across the board with all their income ETFs, they don't sell all of their upside away. They don't sell covered calls on the entire portfolio. Plus, they sell out of the money options, right? But the most important part here is that they're not writing call options on the entire portfolio. What does that mean? That means that portion of the portfolio they're not writing covered calls on remains fully exposed to the Bitcoin price at that point, which means it's going to track the underlying asset, not 100%, right? So to get this part out of the way, when Bitcoin does recover at some point, is BTCI going to recover the exact same percentage amount or the same dollar amounts? Probably not. I would actually say that Bitcoin will likely, when it does recover, let's say it makes a new all-time high, it's probably going to take a little while longer for BTCI to make a new high. So it's going to lag a little bit because we are still selling off some of that upside. But because a large portion of the portfolio remains exposed to the Bitcoin price, it's still going to experience a pretty significant recovery when Bitcoin does. All right. So how does that actually work, though? How do they determine how much of the portfolio to sell on? Because the interviews that I have listened to from the founders and managers over at NEOS, specifically when it comes to BTCI, is that they sell their covered calls typically on between 30 and 60% of their portfolio, as compared to SPYI, which is normally they'll sell on 75 to upwards of 90% of the portfolio. But because Bitcoin's volatility is so much higher, which means the options prices are so much higher, they can afford to write call options on a smaller amount of the portfolio. So maintaining really good upside exposure to the price, but still generating a ton of income because of the high volatility. Now let's break that down. Okay. So when you have something like BTCI that and Bitcoin too, like BTCI has declined, the price of BTCI has declined significantly because Bitcoin has declined significantly in price. What does that mean, though? That means higher volatility. Okay, well, what does higher volatility mean? Well, that means higher options premium. So if you're selling options, which BTCI does, that can be a really good thing for you. Like what you're selling is you're getting a much higher price for the same type of contract. Okay, so we have higher options premiums due to the higher volatility. Higher options premiums means more income per covered call sold. That's more income per contract. We're talking about covered calls here. Okay, so they can generate more income per contract. And when you can generate more income per contract, you can sell fewer contracts to generate this a very similar amount of income, right? So right here at the bottom, NEOs can sell options on a smaller portion of the portfolio and still generate similar income. So that's where that range comes from, where they're selling covered calls on 30 to 60% of the portfolio. Well, it's going to be at the lower range of that. It's going to be at the lower part of that range when there's higher volatility, usually when the price is declining, all right, which means that there's going to be a larger portion of the portfolio that maintains price exposure to Bitcoin, which means what, guys? When Bitcoin's price recovers, so does BTCI's. Now, not 100%, because we're still selling off some of that upside. And I want to be clear on that. But again, comes back to total return, and we're going to get into why BTCI doesn't even need to recover to your original cost basis for you to break even and be profitable. It doesn't need to even get back to its all-time highs. I think it will at some point, because I think Bitcoin's going to the freaking moon over the long run, not in any one given year or whatever. But I do think BTCI will get back to its all-time highs and likely make new all-time highs with Bitcoin. But it is going to lag a little bit. That doesn't mean that we're still in the red, that we're still negative in our portfolio. This is we'll get into some details why here. Okay, so why this matters for recovery: fewer covered call contracts are needed to sell. Okay, so they're at the lower end of their range. Larger portion of the portfolio remains directly exposed to Bitcoin. All right. It's positioned to recover meaningfully, not 100% alongside Bitcoin. Okay. So here's the question. Will BTCI return to its all-time high price? I think at some point it will, but I think a better question is, will BTCI plus the distributions that we're receiving the entire time that we are experiencing the price decline and experiencing the price recovery, will that exceed my original investment? All right. So again, it just comes back to total returns, guys. All right. Because sometimes we get so fixated on the price of the asset of this income ETF, and we forget that it's an income ETF, right? And that we're getting these significant distributions every single month, which does what, guys? That lowers our cost basis. Every time we get a distribution, that lowers our cost, assuming that you're reinvesting those distributions to buy more BTCI, that is lowering your cost basis. So let's say you started at the top, you bought it at, I don't know, $58 a share, and now I think it's like 40. It's at the time of this recording. So it's Sunday right now. Tomorrow is going to be a nasty day. Well, I say nasty day for BTCI. It's just because Bitcoin has declined significantly. Again, I think it was down like 7% yesterday. So BTCI is probably going to take a hit tomorrow, but I get fired up about that because it's even cheaper. I can acquire more shares of an amazing income producing asset. But back to my point. Let's say you bought at the top, $58 per share. Now it's $40 per share. Okay, yeah, I get it, man. That stings, right? But remember, you're getting distributions every single month that are lowering your cost basis. So let's say your original cost basis was $58 per share, and every month that continues to go down. So you get a distribution. Maybe now it's $57.50, and then the next month it's $57, and then the next month it's $56. Right? So you're lowering your cost basis. What this means, guys, is that BTCI doesn't even need to fully recover in order for your portfolio, your holdings of BTCI to fully recover, because your cost basis has been being lowered the entire time. BTCI doesn't need to even make a full recovery to reach break even or profitability at that point, because you're not at your original cost basis anymore, like you would be with Bitcoin, unless you were dollar cost averaging down. But let's say you didn't. Let's say this entire time you have not been buying more BTCI. You've just been reinvesting distributions. And let's say you did the same thing with Bitcoin. Let's say you bought it at $100,000. You're not dollar cost averaging. You're just waiting for it to recover. Okay, well, your original cost basis stays the same. Your break-even cost basis, I should say, with Bitcoin would remain the same at $100,000 because you're not getting distributions to lower that cost basis, versus if you were, maybe your break-even point is now $90,000 of Bitcoin, right? Hopefully that makes sense, right? But the fact that our effective cost basis is being lowered every single month with these distributions means that BTCI does not have to participate in the full recovery of Bitcoin in order for us to get back to break even and profitability. I hope that makes sense, right? To me, I think that's one of the powerful things about these income ETFs that people just forget, I guess, or just maybe don't put enough emphasis on, is the distributions and what that does for our cost basis, right? I think that's really powerful. So I love this part. The reinvested distributions accelerates the recovery of your BTCI holdings, right? We're accumulating more shares at lower prices. Share count increases when volatility is highest because the price comes down. We're able to buy. We're just accumulating more shares. And then as the price recovers, like if I'm buying shares if I originally bought at $58 a share, now I'm getting shares at $40 per share, and then the price recovers, I'm going to have a much faster recovery. Hopefully that makes sense. All right. So I'm going to go ahead and wrap up with that. And here's my closing thought to expand upon the words of the great Jack Mallers, which I love. If you guys don't follow his channel, man, he's just a pillar in the community, in the Bitcoin community. He's the freaking goat, man. He's awesome. He often says, "Stay humble and stack sats." I'm going to expand upon that and say, "Stay humble, stack sats, and BTCI," because we're maintaining upside exposure to the Bitcoin price while generating a very significant yield. We reinvest those distributions to acquire more shares. It's going to compound over time. And like I said, I think we just have a massive opportunity here. Of course, BTCI, is it for everybody? No. Is Bitcoin for everybody? Of course not. But I'm a big believer in Bitcoin. So therefore, I'm a big believer in BTCI, combined with the fact, not just because it's a Bitcoin income ETF, but specifically the NEOS income ETF, because I truly believe in their covered call strategy over the long run. It protects against NAV erosion. It's going to participate in a significant amount of the recovery of the price of Bitcoin. It still generates a really good yield. It's extremely tax efficient. What the heck, guys? Like, I think this is a massive opportunity for us. But yeah, I hope that was helpful. Let me know what you guys think in the comment section below. Give me some feedback. Let me know what you think about this. Do you think BTCI is going to recover when Bitcoin recovers? If not, let me know. Let me know if there's something in my blind spot here that I am not seeing. All right. So either way, I hope you guys are crushing it. I'll talk to you in the next one. To your success. Matty Ice is out.